So if you're a homeowner, chances are you have a mortgage and you've been making payments on it for the last couple of months, couple of years. You got 20, 25, 30 years left to go on your mortgage, but you're also looking at retirement in the next 10 to 15 years, which ultimately leads to the question of, can I actually pay off my mortgage in time for my retirement? Can I finally enjoy a free and clear house to be able to spend time with my family, to travel, to invest more into my 401k, IRA, whatever the case might be? So this video, I want to reveal some rather shocking truth, mathematical truth, when it comes to your mortgage and how it might be designed to keep you trapped forever, even past your retirement. And I get it. As a financial consultant, I've been working with clients for many, many years. And one of the big fears that a lot of my clients have is, Sam, can I actually pay off my mortgage? How can I get my house paid off before my retirement? Many of them don't want to work beyond their retirement. I'm sure a lot of you share the same feeling. So with that being said, my name is Sam Kwok, one half to Kwok Brothers. I've been a financial consultant for many years, teaching clients how to pay off their mortgage faster, as well as get into investments. And this video, I'm going to share something that might be shocking. If you don't know this fact, if you're not aware of this, it may lead you to potentially cost you thousands of dollars of interest, as well as years of time, and it may defer and delay your retirement. So if you are in that category of wanting to retire in the next 10, 15, 20 years, maybe you have friends to do, maybe your parents do, please share this video with them, because I'm about to expose something that I think will leave you kind of thinking and make you consider other choices, as well as help you make a more informed decision so that you can take back your freedom in finances. So let's start with your mortgage and why it's designed to have some deadly traps that you might not have known about. So I'm going to share my whiteboard with you in just one sec. Let's look at your amortization chart and the way it works. All mortgages, whether it's a 15-year mortgage, a 30-year mortgage, 20-year mortgage, runs on an amortization, or at least gets paid off on amortization chart. So I'm going to draw a chart for you guys, just like this, and please excuse my drawing because I'm not the most perfect drawer in the world, but I can explain this really well. So this is a chart, pretty simple, with x-axis and y-axis, right? The axis stands for time, where, again, most of you guys have a 30-year amortization mortgage, so 0 years to 30 years. And the y-axis, the line that goes up and down, represents your monthly payment on your mortgage. So we'll make this really simple, really easy. We'll say $1,000 is your monthly payment, okay? And if you just recently got a mortgage, or maybe you got lucky and got yourself a nice 2.75% APR, whatever the case might be, it all uses amortization. So I'm going to draw two types of lines here. Number one is this blue line, like this, and a second line, which is red. Now, I'm actually make that a little bit more this way. There we go. Let's try this. There we go. Okay, that looks better. So the blue highlighted area, or the blue line, represents the amount of interest you pay in proportion to that of your monthly payment. So this is interest, and the red line is principal. So principal is the actual loan balance that we're paying, right? As you pay more principal, the actual loan balance goes down. We want this because that means that we're building more equity, we're getting wealthier, and less interest is being accrued over time. Now, like I said, the interest, the blue line here, is the amount of interest you pay based on the proportion of your monthly payment. So in the beginning of your mortgage, in the very first payment, you're going to pay the most amount of interest for that particular month. So out of that $1,000, roughly around $750, $700 of that is likely going to be interest, assuming around 4 to 5% interest rate. Now, you'll notice only a very small portion of your monthly payment in the beginning of the mortgage is actually going towards reducing the principal. You're getting that, right? So what ends up happening is really in the first 10 years of your mortgage, okay, I'm going to draw a line right here. Okay, so the first 10 years, what's really happening is that your monthly payment that you pay to the servicer, the loan servicer, the bank, whoever it might be, really most of it is going towards interest, okay? Very small amount of your monthly payments in the first 10 years is actually going towards contributing towards a principal pay down, the actual loan balance. So here's what I'm getting at. The professionals, us professionals, call this area right here, the first 10 years, it's called the front-loaded interest zone, which winds up in a more simpler way to explain it is bulk of the interest you pay ever in the entirety of your mortgage is really being paid in the first 10 years. It's called front load interest zone. Okay, this is basically the banks and the mortgage companies getting paid first before you can ever actually pay off your mortgage or to have a more considerable amount of reduction in principal. So here's why this is super duper important. Okay, the reason why this is so important is that according to the U.S. Census Bureau data, this is based on 2007, 2010, I believe ACS data. According to the U.S. Census Bureau data, the average adult here in the United States moved 11.7 times in their lifetime. Now, if you extrapolate that data and say you're going to live to be about 80 years old, okay, that means, all things being equal, you're going to move every 6 to 7 years. Now, there might be different reasons why you move. You might move because a new job. You might move because you're downsizing or you're upsizing. You might move because you need to move out of a dangerous city or a dangerous zone, and it wasn't used to be that way. There's so many different reasons why you will likely move. I mean, think of the last time you moved. Were you able to predict that? Like, did you see it coming, right? Sometimes you move out of surprise, or you yourself didn't know you're going to move, right? So many times we can't predict when we're going to move. Just life happens. I mean, who knew that COVID was going to happen, right? So what ends up happening is if you move every 6 to 7 years and you do that within this 10-year window that I was just explaining about, guess what's happening? You make it to this 10-year mark here. Let's just say it's 10. And you decide to sell the property, put it on the market, sell it, go get a brand new house, brand new mortgage. Guess what's happening? Instead of you being able to continue the progress you've made over the last 10 years, what ends up happening is if you get a brand new 30-year mortgage, you go all the way back to square one, where vast majority of your new payment is going towards interest. And so what ends up happening is you make it to the 10-year mark, you move again, go back to square one, right? Do not pass go, do not collect $200, right? You go all the way back to the beginning, and you do this whole front-loaded interest thing all over again. So what ends up happening is that you may have been a homeowner for the last 20, 30 years, and somehow you still have 25, 30 years left to go on your mortgage, right? The other possible scenario that could happen, maybe you don't move. The other possible scenario is that you choose to do refinance. And the same exact thing happens is when you refinance to another 30-year mortgage and you've maybe been making payments on this for the last 10 years, like the scenario here, if you refinance to another 30-year mortgage thinking that you're saving money because of interest rate reduction or whatever the mortgage broker or the banker might promise you, what ends up happening is that little do you know is you're going to move all the way back to square one once again, where your new payment, whether it be refinanced or it's a new mortgage, vast majority of your payments are going towards interest. I mean, at this point, you might as well have rented because you've been taking care of all the maintenance, you've footed all the costs for improvements, and yet most of your payments have been going towards interest. You've been renting your house from the bank. Ouch, right? So I want you to be aware of this because this is the ultimate retirement killer, because unfortunately most individuals, homeowners in that category, have, at least in their lifetime, refinanced or sold their home and bought a new home, right? And therefore, they now prolong the amount of payments they're going to have, even maybe past beyond the retirement. So friends, this is the danger of your mortgage. If you don't do anything about this, this is super dangerous. And very few individuals that I know personally, and maybe you know, actually make it to this zone right here, where your payments are actually going towards the principal reduction, therefore building up the equity, therefore reducing, paying off your mortgage and getting rid of that payment, right? We don't want the payment. The payment's ultimately killing our dreams of a retirement. We want to use the money that we have towards our 401k, IRA, self-directed, gold, whatever you want to invest in, right? So friends, I want you to be aware of this not so pleasant truth. And yes, is there a way around this? Is there a solution? Yes, I have a whole separate video where I can show you how to pay off your mortgage in as early as 5 to 7 years within this 10-year window so that you're not a victim to this secret plot, whatever you want to call this, to where you're going to end up paying interest over and over and over again, further delaying your retirement, further having to work even past 65 or 67, right? I want you guys to be able to travel, spend time with your family. And I know this sounds, like rah-rah motivation type of stuff, but it's true. Like, I think most of us want to have our house paid off eventually. Hopefully we don't end up dying with our mortgage still being around. But it's just, I know it's inconvenient to hear this, but there is a way out, and I have a separate video to talk about how you can pay off your mortgage. I'll have a separate video for you guys. But this is the ultimate killer, and again, I don't want to repeat myself here over and over again, but if this was very eye-opening for you, please share this with your friends, family, parents, grandparents, whoever the case might be that need to listen to this video or listen to what I have to say, because this is a danger that I want everyone at least to know. And if you want to stay on this path, great. Just at least know what you're getting yourself into. But if you feel like, you know what, Sam, you're absolutely right, I need to get out of this mortgage situation, tell me how to do this, I have a separate video for that. Cool. So with that being said, we'll see you in the next video. I have some other resources down below if you guys want to check it out. Whether you're on Facebook or YouTube watching this, please subscribe to our channel, like this video, share with as much people as possible. We would love to be a resource to you and help you in any way possible with some eye-opening information out there. Cool. So that being said, we'll see you in the next video. Take care.